Hello and welcome to this week's economic update. My name is Lindy Pond and I present this information each week to help you be a better real estate investor. We're going to go ahead and get started. The NBER, the National Bureau of Economic Reports, I want to say, marks the start of the recession. Is it going to be in Q4 of 2023 is the question. So as you can see, I've listed a fair amount of factoids here for you to take a look at that may indicate or may confirm that we are at the start of the recession. It'll still take a few months for the NBER to come out and say, yes, we're in a recession. They'll say the date was back in retroactive. But if we just take a look at a couple of these, the earnings expectations in 7 out of 10 sectors are falling. Inflation is showing signs of improving. The banks have restricted lending both to consumers and businesses. The banks also have rising delinquencies in consumer, auto, and commercial loans. Housing affordability is at a 35-year low because obviously of home prices, but also the combination of that plus mortgage rates being so high. Credit card balances are an all-time high of $1 trillion. Employment is showing weaknesses across the board from hours worked to less hours to layoffs. Pointing to stress on household budgets are the number of multiple job holders that's risen by 243,000 the past few months to a near record of 8.4 million. And then according to Fannie Mae, the vacancy rates have reached 6.5%. The 15-year average is 5.8%. So it looks like downward pressure on rents will continue because of the record number of apartment units under construction being completed. So as we just take a look at this picture, I just want you guys to prepare that if a recession is coming, it certainly, if it's not here already, it certainly is coming in the near future, according to all the economic experts. Let's take a look at the existing home sales from the National Association of Realtors. Inventory increased slightly by just 1.8%. We have a 3.6 month supply of homes. Normal is 4.6. Days on market went up just a little bit from 22 last month to 23 days. And then 66% of homes sold in less than 30 days, that went down a little bit. Investors decreased from 18% of the total bucket of homes being sold to 15%. And then total October existing homes, it was down 4.1% from last month to this month being October, the report month. Now looking at new homes, opposite of existing homes, right? New home sales decreased 5.6% in October for an increase of 17.7% year over year. This equates to 439,000 new homes for sale, which equals about a 7.8 month supply. You're excited. You think that looks really good, but be careful. Only 76,000 of those 439,000 homes are actually completed, available to move into, which really only is a 1.2 month supply. So still a very low supply, both in the existing homes and the new homes. Our herd on the streets for the week, durable goods, cars, appliances, electronics, and so forth, fell 5.4% in October. This was lower than the expectations and also points to a weaker economy. The FHFA is confirming loan limit increased to 766,550. This is an increase of 40,000 from last year. So clearly they realize affordability is an issue. Conforming loan limit means a conventional, regular, vanilla loan limit. If you go above the conforming loan limit, you then are into the jumbo world. These are all obviously only for primary residence, owner-occupant properties. The Credit Access Survey reports credit continues to tighten because of the expensive cost of capital for banks. And then the number 4th reason that people buy a new home are life events. So in the next 2 years, we've got a couple of things happening. That's projected that we will have 7 million new births, 3 million marriages, and 1.5 million divorces. All of these life events are reasons why people buy a house. Their family's getting bigger, they're getting married, they now needed a second home for each spouse, to each adult to live in if it's divorce. So it was a pretty interesting report that came out from National Association of Realtors. There's a lot of data in that report, but I thought these were a couple little interesting points. The weekly conventional mortgage rate for owner-occupant went down a little bit from 7.41 last week to 7.37. The investor DSCR 30-year fixed rates really haven't budged much in the past week. We are still in a range between 8 and 11%, depending on your credit, loan to value, and DSCR calculation. That is all I have for this week. If there's anything I can help you with your investor financing, you just let me know. Thank you.